All right. Hello, everybody. Welcome back to another episode of the Market Close. We are back as normal in the studio, ending out the market on Monday, March 17th, which seems to be, hopefully, I won't be wrong on this in the next 14 minutes, but it seems to be a green day, a pretty damn good green day. Not in all parts of the market. In fact, one part of the market uniquely is red, but everything else is green. Everything else is pretty much bright green. And maybe it's not as green as it was maybe 30 minutes ago when it was at the very top of its green, but it does look like we are going to be ending out pretty green for the day. This is a heat map of what we've got currently in the market. As you can see, the things that are green are everything. The things that are red are Google, Meta, Amazon, Nvidia, and then Apple and Microsoft are slightly green. So essentially today was an everything except Mag 7 type of rally. Very interesting. Finance, consumers, utilities, manufacturing, energy, non-durables, health. I mean, retailers, everything ended up going green, and it looks like it'll stay green, hopefully for the next 12 minutes outside of the Mag 7. So it's interesting. It's I think there's a couple of reasons for why we are seeing a lot of green in other parts of the market besides the Mag 7. Quite frankly, I do think it's kind of healthy. The S&P 500 right here up 1% of the day, which is very nice. It was up 2% on Friday, which means it made back the 1.3% it lost on Thursday, and now it's up another 1% today. A couple points, and we'll be back right at that 200-day moving average at 572. So nice to see, making some progress right here. But pretty much this entire rally today has been led by everything outside of Tesla, which is down 4.5%, Google, which is down 0.2%, SMCI, some of the semis getting hit with Nvidia down about 2%. Everything else is green, including one of our very own, Robinhood. 8.15% green on the day. Celsius as well is up 12% of the day. Why is Robinhood green? Well, Robinhood officially unveiled their prediction markets. They're not just launching the college basketball contracts. They are officially launching prediction markets across the entire platform. So Celsius right here at $30, up 12%. It seems like college NCAA basketball contracts are going to be the first addition outside of the stuff they did for the election markets on the new prediction markets ecosystem that they're launching. Super Bowl got shut down by the CFTC. And based on what Vlad said today, I think this is not just a one-off thing. It looks like they are officially going for launching the next chapter of Hood, or the next vertical that they're getting into. He says right here, over the past few decades, we have made tremendous strides in solving these specific problems via social media and the internet. However, we've created new problems. There are so many conflicting viewpoints out there that they contradict each other, creating the sensation that we're seeing two different movies playing on the same screen. Some even claim that objective truth may be an illusion and the search for it is a fool's errand. Enter prediction markets. At the most fundamental level, they are the application of capitalism to the pursuit of truth. I thought that was a very philosophical way of introducing the foundations for why prediction markets matter. Market incentives and the wisdom of the crowd sift through all the information out there to determine answers to well-specified questions and outcomes to important events, sometimes even before they happen. He then says we're starting with politics, economics, and sports, and we'll continue to broaden the coverage over time. As with any market, they become better with more liquidity as more people participate, and they are officially live on Robinhood here today. Bullish. I think it's pretty damn bullish. I read a lot of the bear arguments today on Twitter. People were saying this is going to corrupt the youth and this is not good, and we should separate the election betting from the main app with the stocks. I think all the arguments are bad, really bad. I tried really taking the arguments at their highest level. Every argument I saw today on Twitter by the people that felt like explaining how bad this was for Robinhood, they're just not good arguments. They're bad arguments. It is what it is. Like, I've got a background in debate. You know a bad argument when you see one. These are not good arguments. And I think we'll get into that debate on Robinhood Weekly tonight. So it'll be a good episode because I think we can explore both sides to it. But I mean, crypto is gambling. Options are literally gambling. Betting on Duke versus Kentucky. If you don't want to do it, don't do it. But if you do want to do it, it's there in the app and you can do it. And Robinhood will make some money if you do it. All of it's gambling at the end of the day. So the idea that we're going to create some arbitrary distinctions between an option contract, which starts at one point and ends at another point, and a prediction contract on a basketball game that starts on one day and ends after 3 hours when the game is over, to me is ludicrous. I don't think there's an argument there. So it is what it is. I think it's good. Hood at 7%. Look, is it going green because of the prediction betting? Maybe. I think more so it's going green because the entire market's going green right now, including Luminar Technologies, which is up 23% after the Mark Rober video came out. The Q's right here at 484 as well. So will we hold this 7%? Maybe, maybe not. I think we have to deal with Wednesday. We have FOMC along with April 2nd, which we're going to see if we have reciprocal tariffs or not. But if you feel that the correction is over, obviously some of these stocks are still priced in a pretty attractive way, including Robinhood, and I think the market's reflecting that right now. Netflix right here is up 4.2%. JP Morgan's going green. You got Broadcom that was red in the morning in the pre-markets from that Google headline. Now they are basically flat on the day. Grab was up today, up 1%. MicroStrategy down about 1.49% in Bitcoin, 84,500. That's recovering a bit from 82,000, which is where it's at currently right now, up from earlier in the pre-markets. So there we go. That's what we got going on as we end out the rest of the day. Amit, are you off StreamYard? No, I'm on StreamYard, but the reason you're, I don't know why it's doing this with the, when I highlight your comments, it used to be blue, right? Now it's like grayish. I don't know if I picked a setting or I don't know if that's just StreamYard's new update that they didn't want to tell us about. Dude, I would be so short StreamYard if it was a stock, but like it's the only good one that's out there. So we have to use StreamYard, but yeah, I don't know. I think they just changed the design or something, and that's why it's looking a little weird. By the way, Mizuho also came out and said $80 for Hood. So they say, hey, we are reiterating our outperform. We remind investors of our previous proprietary user survey. 2/3 of Hood users we surveyed already utilize mobile sports services like DraftKings. The vast majority of Hood surveyed Hood users, 78%, indicated interest in using Hood for sports betting. We think this thing is going to $80, and we are positive on the news. So that's what you got in the context of Robinhood. Again, I just think the arguments against it are not interesting, dude. Like the arguments that we need to protect the sanctity of investors by separating gambling from the core product of the app. I'm like, okay, so why don't we separate options then? Oh, we won't because it sounds stupid, right? Like, yeah, we're going to have options on Robinhood in one app and stocks in the other app. No, that sounds stupid. Like that's just dumb. We're going to have crypto in one app, options. Like, no, this is all dumb. This is an integrated financial ecosystem. You don't care about gambling. Don't gamble. And quite frankly, if you lose your money gambling, you deserve to lose. I mean, like, are we going to make casinos illegal? Are we going to make Vegas illegal? Like, if you lose your money, you lose your money. You learn lessons. And if you go broke, you go broke. That's like that. At the end of the day, some level of individual accountability has to be there. I'm not going to be betting on the NCAA tournament because I just don't care that much about sports. I don't really watch the tournament. So I just have no desire to do that. But for the people that want to do it, let them do it. And if Robinhood can make money off that, then sure, they make money off it as well. Like this argument sounds like the people that said we can't institutionalize or have an ETF for Bitcoin because it would encourage more people getting into risky assets like Bitcoin. It's like, okay, but we did institutionalize it. Tons of money managers have access to it. And now people are able to bet on the volatility of crypto. I don't know how this argument makes any sense. And I'm interested on Hood Weekly to get other people's perspectives. And I think Roy has some counter arguments to it. So it'll be a good debate. But I really don't get why people are upset. And there's a lot of people that are upset. It's not just one or two people. There's a bunch of people in my comments that were like, this is horrible for investing. I'm like, okay, if that's what you say. But I'm pretty sure if some of these other fintech products started innovating even 1/10 of what Hood is doing, it wouldn't be bad for the sanctity of investing. It would be like, oh, wow, a fintech that actually wants to innovate, which is, I think, very important. That's basically what Robinhood is trying to do. Elon did a new interview, and he said, we're going to save $1 trillion, hopefully, with Doge. Here's what he said.
You seem like a timeline guy when you say, all right, I want to get in there and get all these, numbers and things. How far are we from the end game where you've seen it all, been able to process it all and fix it? I mean, are we years away, months away?
Not years. I mean, I'm reasonably confident that we'll be able to get $1 trillion of waste and fraud out, and that meaning that we'll have a net savings in FY26, which starts in October, obviously, of $1 trillion.
Wow!
Provided we're allowed to continue, and our progress is not impeded. And we're very public about what we do.
Yeah, you put it on the website.
It's on the website.
I don't know how we could be more transparent. Literally every action we do, small or large, we put on the Doge.gov website, and we post on the X handle. And when people complain about it, and they say, "Oh, you're doing something unconstitutional," I'm like, "Well, which of these cost savings?"
You're doing it in the daylight. I mean, everyone knows exactly what you're doing.
Extreme transparency.
Yeah.
So I don't think anything's been this transparent ever.
So that's a new podcast that Elon did with Ted Cruz today, basically talking about the concept of Doge. This is also what Elon said in the podcast, particularly about magical money printers that exist inside of the government and their ability to basically print as much money as possible. Let me pull that up right here. Okay, here it is.
So, I call it magic money computer, any computer which can just make money out of thin air. That's magic money.
So how does that work?
It just issues payments.
And you said there's something like 11 of these computers at Treasury that are sending out trillions in payments?
They're mostly at Treasury. Some are, but there's some at HHS, some at, there's one or two at State, there's some at DOD. I think we found now 14 magic money computers.
14, okay.
They just send money out of nothing.
It is interesting, dude. It is very interesting. When you think of magic money, a lot of people think about Bitcoin, but in this context, Elon's talking about essentially the Fed being able to print as much as they want and send money wherever they need it to go. Look, we're going to see over the coming months what Elon's going to be able to do with Doge. I am optimistic that he is able to really create some meaningful cuts in waste and fraud, but over the coming months, I think we'll get a better understanding of it. One thing I did find out from the podcast is he's in DC doing that podcast with Ted Cruz. He's not at the Tesla factory. So obviously, he is still in DC and he is consistently staying in DC to be able to get the job done when it comes to Doge. Obviously, Tesla investors are going to have to deal with that the way it is, but this mission seems to be a lot more important to him than pretty much everything else. Tesla right here down 4.73% of the day. The rest of the market, we got 3 minutes left, giving up some of their gains. Robinhood was up 9% at one point. Now we're up 7%. Pretty normal. Palantir right here, 87.43. That's up 1.3%. The Qs 483, PayPal 69, S&P 500 was up 1%. Look, we got a red candle right there. Looks like we're going to end hopefully above 0.75%, but just under 1% at 0.8% currently right now. Reddit expanded their partnership with Google today, so that gave Reddit a little bit of a boost. They were up at one point. Now they're down 2% again. Wow, they got to 142 today? I didn't even see that. Holy crap. Holy crap, dude. Wow, Reddit went from 126 to 142. If anyone traded that or then shorted at 142, congrats. But yeah, they announced some partnership with Google, just an expansion of what they've been doing with training for LLMs. That's my understanding of it. Came right back down. This is, I mean, if this little upside down V shape is not the definition of this market, you had a big rip on Reddit, 125, 142, now right back down to 125, down 2% of the day. So granted, moving on a Google partnership news is weird to me. It didn't seem like they needed that big of a move just off that partnership, even if it's like an expansion of the previous partnership that they've had for the past couple months now. Rocket Lab as well, almost was $20 today. Right now, back down to 1909, up 1.46%. We got 45 seconds until the market closes. NVIDIA ended up going red for the day. A lot of these names are holding some of the green. They're not holding the highs of the day, but that's okay. It does look like we are going to book in another green day, which I guess is all we can ask for in the current environment that we are in right now. And I guess we'll see tomorrow if this ends up dead catting. I mean, the other problem is we have FOMC on Wednesday. So you could have a lot of people that just sell tomorrow into the strength, if there is any strength, because they're afraid of what J Powell's going to say. Even though we'll talk about it more, but I don't think J Powell's going to say anything that different than what we've heard over the past couple of weeks. But overall, that might be an event that people want to be a little hesitant on. All right, here we go. St. Patrick's Day, Monday, March 17th. The stock market is once again closed. All right, there we go. Robinhood ends the day up 7% on the day. Not bad. Again, it was at 42.92 at one point, ended the day at 42.03. Up 7.11%. You got Intel at 25.70. That was up 7% on the day. NVIDIA was down. Tried to go for 124. Couldn't make it. Now down 1.76%. Jensen will be speaking tomorrow at the GCT conference. Rocket Lab up 1.45% of the day. Walmart was up 2.5%. Celsius was the big winner of the day, up 10.5%. Really incredible momentum by Celsius after a rough week. They did have a good earnings. They popped on those earnings, came right back down, and now they're back kind of close to that earnings level. 29.93 on Celsius. Tesla 238. So that was down about 5% on the day. Reddit was down about 2% after ripping towards 142. Palantir at one point was at almost 90, now at 87.35. That's down about 1.29%. Alibaba was up 4% on the day. PayPal was up 1%. SoFi, or the S&P 500, up 0.75%. So not full 1%, but up 0.75 is not too bad. And then SoFi right here was up 2% on the day, 1232 on the day currently right now. The cruise lines are up. I didn't look at the cruise lines. They do have earnings this week. Carnival was up 5%. Probably because Delta was up 0.34. Some of the airlines were up a little bit. United was up 0.34. Okay, airlines were slightly green. Carnival was up. Norwegian seems like it was up. Yeah, Norwegian was up 4.5%. And then Royal Caribbean, yeah, all of them, 3.4. So all the cruise lines got a little bit of a bump today. Are you aiming to hit 1,000 shares of NVIDIA mid? Good question. I have 800 shares. I think if we see 115 or below, I'll probably finish and buy those final 200. And I had 500 like a month ago. So I bought an extra 300 at like 114, 115, 117. Not literally that 104 bottom. But yeah, I mean, if we head back to some of those levels, I'll probably buy the extra 200. And we'll just get to 1,000 shares officially. I still think NVIDIA is going to put up incredible earnings. I think they're ridiculously cheap given the levels that they're trading at right now at a 28 times price earnings. Their gross margins, people are concerned about that. Those are going to be back to the mid 70s by the second half of the year. I mean, at this point, you either believe in the NVIDIA thesis or not. And if you don't, you stay away. But if you do, then I think it's, not as cheap as it was at 104, but at 119, it's not as scary to get into that versus something like Apple, in my opinion, at 214. Trading at a bit more of an expensive valuation. Celsius right here, 29.93 after hours, up another 0.17%. Robinhood's down a little bit after hours. Same thing with Palantir, Alibaba as well. The Qs ended up green somehow, even though everything was red. Microsoft and Apple were the only Mag 7 stocks that were green on the day, which is weird. Microsoft was barely up 0.04. Same thing with Apple. Apple up 0.24. So pretty much all of them were red or flat. But the most expensive Mag 7s, Apple and Microsoft, ended up being the ones that were green today, which was weird. Oh, I did buy some Google today. I bought 15 shares of Google. I forgot that about Google. I think I either got it at 164.9 or 165.2, something within this range. It's basically been oscillating between those two levels the whole day. But yeah, Google right here at 164.29, down about 0.73%. It's down another 0.3% after hours. Again, Google has been going through some really weird headlines, but outside of that, I think it remains pretty cheap. I don't have a position in SMCI. I do not have any position in SMCI. Color is a small cap, so that's why I don't really look into color. Bitcoin fueled small cap, not something that I'm that interested in, but I understand why people are excited about it. Up 20%. I just think you got to be really careful in this environment with some of these names that are pretty much only pumping because of Bitcoin or some random headline. Color did get to $5 at one point, and so there's a lot of bag holders at $5 right now, but it was at like 20 cents. I think 5 months ago. So still up a good amount from there. SMCI down about 0.07% after hours, down 0.55%, and overall red for the day. Where was AMD? It was up 5%. AMD ended out the day up 3.59. Not bad. Up 3.59 for AMD. Okay, cool. So here's a couple of things I want to show you guys, and then we'll get into some other topics. This one was an interesting chart, which justifies the argument for why people took advantage of buying the dip. So the S&P 500 traded 3 standard deviations below its 50-day moving average, the most since the start of the 2022 bear market. You can either interpret that as bearish or bullish, but this is also the second largest divergence since the 2020 pandemic. On Friday, after rallying 2.1%, the index closed down 5.5% below its 50-day moving average. The S&P 500 has traded below its 200-day moving average for 5 straight days, the longest streak since October 2023. And then I think by November 2023, we started really putting in a bottom, and then we moved higher into 2024. So if you look at the price of the S&P 500 versus its 50-day moving average and the standard deviations, it is away from that 50-day. It is reaching levels that signal, hey, this is when you would tend to get a bounce. And the question is going to be if we do end up getting that bounce or if that doesn't happen. I do agree. Nothing good happens below the 200-day moving average. It is not fun to be below that 200-day, which is why, if we can get back to 575, we're going to reclaim the 200-day. And that would be really nice from just like a psychological perspective, I do think it's going to be tough to reclaim that because now everyone knows we got to get back to the 200-day. And, there's probably going to be algorithms that make it a little tough to get there. We almost tried today, up almost 1%, 567. So we did have Green Day. But that's going to be the biggest thing to see. The problem with this bounce right now that I'm seeing is that outside of the sentiment indicators and the sort of macro deviations we're looking at in different charts, I looked at a seasonal chart this morning that kind of made it really easy to buy the dip if you think it's going to follow its historical pattern. The reason all of this is still a little tough to navigate is because none of the tariff volatility has went away. We haven't reached a deal with any of these countries. It looks like on April 2nd, we're going to get a retaliatory effort by a bunch of these countries as well. So just because Trump's not tweeting about tariffs doesn't mean the volatility is gone. Along with this 10-year that's not coming down. I mean, today was basically unchanged at 4.3%, and we need this thing to come down. So I still feel like the core elements of why someone would be a little scared, aka the Fed, or not the Fed, the White House cares about the 10-year coming down, which might put pressure on stocks, and the White House cares about inflicting tariffs. Those two core variables have gone nowhere. Like they're still up in the air. It's just like people are ignoring them, I guess, for the past couple of days. And that doesn't mean that markets have to necessarily go down just because you take those into account, but it does mean what is the ceiling to the bounce if there is a ceiling and if this is a real bounce, given those two variables have not gone away. And so that's, I think, a little bit my fear with even getting excited to buy this dip, even though there's plenty of bottom indicators that are not something that necessarily should be ignored. Tesla right here down another 0.5% after hours, 237. Reddit as well down about 0.34%. Celsius flat, and then Walmart up slightly after hours as well. Do you look at Truflation data? Inflation is coming down. Yes, I agree. Inflation is coming down. The only problem is the Fed doesn't look at inflation data or from Truflation, right? By the way, Truflation has actually gone up in the past week. It was at 1.3 at the lowest. Now it's at 1.72. So although it's significantly lower than what the Fed or what the BLS is showing, you do have a little bit of an uptick right there. But in general, I mean, like as much as I care about this indicator, the Fed's not going to look at it. So unless there's something that's immediately going to hit the BLS and it's going to create some dramatic 50 basis point decline in April or March, which is possible, but it's just unlikely, then the Fed doesn't care about this. And so it's going to be a question of when the Fed actually wakes up and looks at some of the stuff that's lagging, which is shelter, which is one of the core things that's lagging. On top of that, oil prices have been coming down. So I don't go to a gas station anymore because I have the Tesla, but I drive past a bunch of gas stations, and I mean, it's been the cheapest it's been in a very long time. I mean, it's at $2.72 in New Jersey. Some places are showing $2.41. The national average, I think, is just under $3 or a little bit right at that $3 level, maybe a little bit above $3. But it's coming down. And so from that perspective, that should be great for the markets because oil costs coming down means that input costs on everything, whether it's groceries, airlines, cruises, whatever, will come down, which should hopefully increase profit margins. But it's one of those things of just like, how long is it going to be down? And could any tariff volatility make oil prices go back up? And I think that's what we're going to have to see as well. It's still $5 in California. Holy crap, dude. That is crazy. I thought it would be a little bit below 5 in California. Well, in Ohio, Jersey, Texas, I mean, it has been coming down aggressively. I mean, I have not seen 270s in a while. Here's Trump talking about eggs and oil on Air Force One yesterday as well.
I will tell you what is smart. When I took it over, eggs were through the roof, and now eggs are down 35% over a short period of time. And other things, fuel, gasoline, energy is down, way down. Oil is down to $65 a barrel. It was $82 a barrel. And when energy comes down, pricing is going to come down. Prices for groceries, etc., are going to come down. So, yeah, I think we're setting a good table. I will tell you.
I mean, look, egg prices are coming down. You can't deny it. Egg prices are indeed coming down, which is good. Now, granted, it shouldn't have been that hard to get egg prices to come down, given how crazy they were trading. So it's one of those things where Trump gets to take victory for it. But it's also like it was bound to come down at some point. But this is what every presidential administration does, right? This was an alley-oop for Trump. Like if eggs wouldn't come down, you would have some major issues. So The fact that eggs are coming down, it's something that he's going to be able to take victory for. Same thing with oil prices. If there can actually be any resolution to Russia-Ukraine, that should also help oil prices as well. So there are some catalysts that Trump can use to be able to say inflation is significantly coming down. And that's good for him because that leads Jay Powell getting closer to the cut. But I think the broader argument is how bad do we need to have a growth slowdown in order to get inflation to really slow down for the Fed to cut? Or is Jay Powell going to capitulate? Are we going to get 2.7, 2.6 and Jay Powell's like, yeah, it's time for a cut? Because last time he didn't cut until we got 2.5. We got 2.4. Last time he waited to 2.4 until he gave us a cut on the headline CPI. Right now we're at 2.8. So I wonder by May, if we're at 2.7, does that let Jay Powell think it's okay to cut? Or, is this not going to be exactly the right environment yet to officially get that cut? But I think over the coming months, we're going to see how this plays out. Eggs are still $7 per dozen at the store, still not buying. Yeah, wow, $11 a dozen in Palo Alto. Holy crap, dude. Yeah, it's not the actual store prices of eggs aren't coming down everywhere. The overall average is coming down. I think it'll take a few weeks for store prices to reflect that, but at least we are getting a little bit lower than what we had a few months ago. I think we have a similar year to 2021. I don't hate anyone making that argument that this feels very 2021-ish, because in 2021, like, the market had multiple rebounds where it was up and down, and then finally it topped out in November, and then we had that epic 2022 crash. Obviously, I think the macro dynamics are different, but it also does feel like some of these bounces are just rooted in like riding the volatility toward the upside. Everyone thinks we bottomed, and then boom, you get a headline that takes us down. Whereas in 2021, it was primarily rooted in more readings of inflation and valuations getting insane. One thing I think that is really good, which is what Basent said this morning, is that it is healthy to have a correction. We've had a correction defined as 10%. That is important. If we didn't have a correction and Robinhood got to $80, as much as I love Robinhood, I do think like it's going to take time for it to get to 80. It shouldn't go from 35 to 80 in the matter of 7 weeks, right? That's probably not healthy. We needed a correction back to these normal levels. And I think in 2021, we didn't get those, which is why things went crazy. And then 2022, we had a horrible year. So maybe some of those corrections actually save us before we get hit in a more egregious way. Let's get an update on sentiment and how the market is kind of thinking of this being a potential buying opportunity, or if this bounce being a little bit more fake than not.
The market's been contending with, and whether we have some clues as to whether it's lifting.
Part of it's seasonal. Yeah. We've seen a lot of this, both in the economic data, plus what goes on structure in the market-wise, et cetera. You had a lot of sell programs hit. If you're into the day-to-day activities, the tape of the day, a lot of sell programs hit for obvious reasons, a lot of uncertainty, et cetera. But then there's always a high noise to signal ratio. Soft data versus the hard data. And all this is coalescing in the last 4 to 6 weeks or so. The high-valued parts of the market obviously taking the hit. They're the big overhang. They're the anchor that brought it down. But that's what creates bargains for the areas that had nothing to do with anything of the uncertainty, whether it's tariffs or other things. So, we were out there thinking that in the next week or so, last week, you would get the selling exhausted. But it still needs a catalyst. It still needs confirmation that the biggest worry, which is growth, is really not going to unfold. And that's kind of where we are right now.
And that's also what Steve was talking about this morning when it comes to Q1 guidance, which is going to be really important. If we get some crappy guidance, then yeah, there's an issue with growth. If not, then this is the easiest buy the dip ever. Because if growth is not slowing down, then that means equity prices just get cheaper.
And we're in that moment of figuring out if growth is going to hold up or not. Yeah.
Yeah, I think you got to start with the consumer first and foremost. You have to watch the consumer trends. It's still the engine. And, we have 69 to 70 million households at the bank. We have very good data around the consumer, still stable. A lot of this is seasonal. You do get that so-called, let me look for something cheaper. Let me look at that replacement of where I'm going to spend my money. And then as you get into the spring, you get further away from the bad weather as well. We think that trend actually starts to tick back up again and provide some of that confirmation that the consumer's okay.
Courtney, part of what we are dealing with is, I think, elevated expectations among investors coming into the year, along with those higher valuations. And so the question right now is, if this has been mostly positioning and the rate of change of growth in the economy has gone down, and maybe first quarter earnings are getting cut 10% at the index level, going down 2 PE points in the S&P over that time, either it creates an opportunity or it presents a warning. How are you thinking about it?
I think this is more of an opportunity, and I think a lot of this downturn has been sentiment driven, and I think the fact that this market has gone down so quickly on much more just sentiment being negative, much more so than the data actually reflecting that thus far, I think goes to show that. And you just got the investor sentiment surveys. Bearishness levels are close to 60%, and the highest that's been is 70% at like the worst of the 08-09 recession, right? So I think, barring some really big downturn, I don't know how much worse the sentiment can go. And that really, I think, leads to a buying opportunity. And it's not all of the markets that have gone down. About 95% of this downturn has been because of the Mag 7. You're seeing a lot of other areas are actually holding up better. Like even today, you're seeing China's continuing to do well. Europe has been outperforming the US. Healthcare has actually been holding up. There's a lot of places where, as a diversified investor, you've actually been able to be more insulated here. But I think you want to take advantage of this as a buying opportunity more than anything else.
It's funny, man. It's like you get a green day and people start saying, hey, this has been a buying opportunity, which it very well might be. But it's just, again, it does feel very sentiment driven, right? Because if today was a red day, it would be like, well, yeah, it was stupid to buy the dip, yada, yada. But because we got a second green day in a row, feels like it was smart. We just have to see if we can actually make some progress on this bounce, which I think we will. I'm just a little skeptical given we still have tariffs on April 2nd. But honestly, I probably shouldn't be that skeptical because knowing Trump, he probably is going to delay those tariffs to May 2nd after April 2nd comes by because he probably doesn't want to tariff Canada by 25%. So it's really one of those things where the only solution here, I think, is to, it's the most basic thing ever, but DCA and just, be in it for the long term because you just really don't know. Like I bought Google today at 164, so I bought that dip because I think it's cheap. Could Google get to 160? Sure. And if it does, I wouldn't have to, kick myself for buying it at 164 because I think at 160, it's a little bit cheaper than 164, but at 164, it's not that it's expensive. And I think that's the only mindset to kind of deal with right now, unless Google's going to 120. And it's like, if it is, then everybody was wrong. Or, this entire market's getting hit pretty badly, but I don't think we're going that low. Lucid is up 4% after hours. Not sure why. I don't know if there's any news for why Lucid is up 4%. But that one is moving a little bit after hours. S&P 500 down about 0.09% after hours as well. But Sen said reciprocal tariffs aren't happening. Yeah, I don't think there's no way he's right about that unless they come to a deal. Like if they don't come to a deal, Canada's going to put more tariffs on them. And so will Mexico, so will China. So if he says reciprocal tariffs aren't happening and he's confident about that, what that leads me to read into is that he's confident they're going to get a negotiation done in the next 2 weeks, hopefully. But it's unlikely to me that the U.S. is going to put on tariffs and not deal with countries fighting back. Oh, and also the EU. We didn't talk about that. I mean, we have plenty of tariffs that we want to deploy against them that they will probably hit back against as well. Like the way this was resolved, I don't think we're going to get into a massive trade war by the end of the year. I think it's going to be like 2018, where it takes a few months. There's a lot of volatility in markets while this is happening, but then you get to a deal. And I just don't know when that deal is coming, but it wouldn't surprise me if it's sooner than later. It really wouldn't, because at some point, a deal needs to happen. Like we can't survive like this forever. Is Oklo a value trap? Oklo has no earnings or revenue, to my understanding, or if they do, it's very little. It is fundamentally rooted in your belief in AI and the energy demand that will be needed from a nuclear perspective on data centers, which is why Oklo is even up as much as it's up. At one point, it was up to like $60, but took a haircut as well. Archer, as well, let's take a look at that, is up 5% on the day. Same thing with Archer. Archer was $3 in November. It's at $8 right now. A lot of it is on the belief of what eVTOLs will do. Same thing with Oklo, the belief on nuclear energy. But yeah, those are definitely two speculative names currently right now. Amit, what's the fair value of Robinhood? It's interesting you asked this question. Amir, who is a big part of the Palantir community, he officially bought Robinhood. And he put out a model today. He's coming out with a video soon. And his model, I don't want to he sent it to me. I don't want to give it away because he's going to do his video. But let's just say it's significantly above $42. But he'll be coming out with this video pretty soon. And you guys will get to take a look at what he's thinking. But, Amir is one who's been pretty bearish Robinhood for a while. And the reason he's been bearish Robinhood is because he doesn't like the consumer element of it. in particular because businesses that are reliant on consumers, to him, don't really have sticky moats, right? Because consumers can just switch as much as they want. That's kind of his thesis on B2C versus B2B businesses. But on Robinhood, after running the numbers, he felt there's a very attractive opportunity here given the recent pullback. And so I think his video comes out in a couple of days. You guys will be able to see it. He'll be on Robinhood Weekly next week, so we'll get his thoughts as well. But yeah, he thinks it's cheap. Arnie's been in Robinhood for a very long time as well. Arnie got into it back at $7. Arnie's been reloading on this dip as well. So you do have a lot of people just saying, hey, probably didn't deserve to be at 65, but maybe doesn't deserve to be capped at 35 to 40 here right now. What'd you guys buy today? I see some of you guys saying you bought some stocks. I bought Amazon today on the dip. I see some of you guys buying Celsius. Put in the chat what anyone bought. The prediction markets might not be in Android because they're rolling out. A lot of people on iOS don't have it either. So you have to update the app. And if you already updated it in probably a couple of days, it'll be rolled out to everybody. But some people on their iPhones don't have the prediction markets on Robinhood yet either. So it should be rolled out soon. I got it like 2 hours ago when I was updating my app as well. Robinhood right here, 4202. Currently right now after hours. Okay, we got some Teslas in the chat. We've got some Hoods, MSTU, interesting. Some leverage bets on MicroStrategy, Google, and ELF. Okay, I bought some Google today as well. NVIDIA, we got some grabs. Look, I think grab below 450. I think you're getting a lot of earnings for free on grab, but we got to see where the macro takes it. Rocket Lab from Irwin. Some more Rocket Lab. NVIDIA, HIMS. Oh, a politician brought HIMS today. What's the dude's name? Congressman Tony Wyad. He bought HIMS and he bought Square. HIMS and Square. Who is this guy? Tony. He is a Wisconsin's 8th district. Representative from Wisconsin's 8th district. Okay, well, this guy bought HIMS and Square today. So there you go. We got some VGs in the chat. Matthew bought Tessie. Jason bought Tessie today as well. I was texting him earlier in the day. He bought some Tessie. So he also bought that. Celsius, Amazon, PayPal, ASML, VG. Did VG have another green day? It's had 3 green days in a row. VG, yeah, wow, up 5%. All right. So it looks like this thing bottomed at about $9 a couple weeks ago. Hopefully. Insiders have been buying like crazy. We did look at that last week this is in the natural gas space. Up 5.42% on the day. What do you think about Red Cat? I like Red Cat. I mean, I don't own the stock. I don't know much about the financials of the company. I did interview the founder of it, and that interview will be out later this week. I think drones are cool. I just don't know much about the company and the financials, the growth prospects, anything like that. But I think it's a very, very interesting idea. And also, I mean, their partnership with Palantir is exciting. And Jeff the CEO talked a lot about how Palantir is really positioning them in a meaningful way to build autonomous drones. We also talked about the ethics of autonomous drones. It's a good discussion. I think a lot of people that are interested in the drone space will get value from it. But what he said is that it looks like the military is transitioning to a spot where they really care about drones, and they in particular care about autonomous drones. Just from a targeting perspective, it's becoming much more viable for the military and the army to procure these types of products. And that's where Red Cat potentially can get a bid as well. Yeah, Jeff was at AIPCon. So got to work with him, and I think that'll be a cool interview. Why are we ignoring the insane ratios Palantir has? We are not ignoring it, at least not on this channel. This has not been the channel to ignore valuation. I have said, honestly, since like $45 that Palantir is expensive. It continues to be expensive. So it's just a question of, do you want to pay these premiums or not? You know, I think everyone has a complex relationship with this because so many of us got in very cheap and no one wants to sell because we see the potential, even though probably at some level, you know, valuation got egregious. And we saw that at 125, right? Valuation got really high and it took a nice little pullback. Some people believe it has to go back to 40. I'm not of that belief. I think we go back to 40 if the market really has a massive correction. I think really max pain, in my opinion, is 55 to 60 if things get really bad. And I think that would not happen because of anything Palantir related. I think they're going to crush Q1. I think that's fundamentally macro external events. DoD wants to cut spending, which would still be bullish for Palantir, but maybe the market takes it down on that news. But yeah, it's expensive. It is expensive. And I understand why people might not want to buy currently at these levels. What are my thoughts on Nike? I have no idea what to expect going into Nike earnings, because this is the third quarter with or second quarter with the new CEO, and third quarter since they announced like that this was going to be a transition year for them. Bill Ackman is still loaded up with almost 20 million shares of Nike. I don't know if Elliott is the guy to rechange the company. Like, I really don't. So I don't have a position in this, nothing riding on this one, up 2.85% of the day. I do think in a growthier environment where NVIDIA goes to 150, let's say if that happens, I don't know if there's that much money flowing into Nike, but if NVIDIA stays stuck at 100 to 110, yeah, there's probably money that wants to take a chance on something like Nike. So in this regard, I mean, we'll see on earnings if there's anything meaningful, but I don't think there's going to be some dramatic growth in earnings. They still have a ton of China exposure. Like, there's a lot of bearish arguments for Nike outside of the fact that it could be a recovery play and there's a nice dividend. But it's just a question on, do you think NVIDIA has value right here at these levels at $100 or Nike? And a lot of it has to do with the trajectory of where the market's going over the long term, or where you think the market's going over the long term. Did you see the smirk on Karp's face when asked about Doge on Friday's CNBC interview? Yes. I need to clip that, and we need to have that clip constantly available because it was a great smirk. We replayed it like 5 times. It was an absolutely great smirk. I loved it. I think to me, it's pretty obvious. Hey, he thinks there's something going on with Doge. Like, that was one of those smirks where it's like you're laughing because everyone is so wrong. That was like me today, laughing when I was reading these comments about Hoods ruining the youth because of sports betting. I'm just laughing. It's just like, these are such bad arguments. Like, these are not good takes, but people really believe in them. And I'm like, all right, I guess if that's the argument you want to make. Did Amit talk about the director from Palantir that sold $300 million of his shares? I did not talk about that. We covered insider selling last week, so maybe I brought it up during that insider selling. In general, again, I just don't care that the insiders are selling. And if my solution on this has been really simple. If you care about the insider selling, then you should sell with them. But if you don't, then there's no reason to complain, because if you're going to hold your stock while the insiders sell, then you obviously believe that the stock deserves to be held, even if the insiders feel that the stock deserves to be dumped. Now, the question becomes qualitatively, why do the insiders feel the stock deserves to be dumped versus why you as a retail investor believes it deserves to be held? And it might have something to do with the fact that the insiders have tens and tens and tens of millions of shares, and you might have tens of thousands. And so them mitigating some of their risk after being there for 20 years, because pretty much all of them have been there for that long, is a little different than someone with 10,000 shares thinking that they need to trim because Stephen Cohen, one of the co-founders of Palantir, sells $300 million worth of stock. So yeah, to me, it's just, I really don't think it's as relevant anymore. What do you think about Cheesecake Factory? I haven't been to Cheesecake Factory in a long time, to be honest, but I love the restaurant. I think the stock is interesting. I know Jeremy likes this stock. I haven't really done deep digging of their financials. They have a 2.28% dividend. It is up like, it's up like 20% this year, right? It's up, no, never mind. Oh, at one point it was 56. Now it's at 47. Now it's down 2% year to date. Yeah, dude, again, like, I'd rather buy NVIDIA over Cheesecake Factory, right? Like, I start comparing a lot of these opportunities to stuff that is grossly undervalued, like a Google, in my opinion. And I'd rather buy Google over Cheesecake Factory, Google over Nike. And I think, it's going to be funny. I think the rest of the year is going to be a question of, do people buy the Max 7 dip, or is this an accumulation year for Max 7? Which isn't the worst thing in the world. Like, if we get to buy NVIDIA and Google at these levels for the rest of the year, would I be the most upset about that? Not that much. Because, I mean, if you believe in the long-term moats of those businesses, yeah, they're cheap. And if we avoid a recession, they only get cheaper. So maybe the market expands this year while Max 7 stays down. But if we get Tesla under 200 and I get to accumulate a big Tesla position under 200, I don't hate that. It would suck for investors. I get it, but I don't necessarily hate that. Is Cheesecake Factory a good spot for dates? I think so. Okay. I think Cheesecake Factory is not horrible for dates. It's Applebee's is bad because it's like I love Applebee's, but it's like you don't take a date there. But you don't need to go to some 5-star restaurant either for a date. So Cheesecake Factory is right in the middle. I think it's very reasonable. And the cheesecake's actually good. It's not bad. Google or Amazon? I'd buy Google over Amazon. I like Amazon, but I do think they have more of a tariff threat than Google. And I think Google's cheaper than Amazon. But, I mean, are you really going to be upset in 5 years from now if you buy Amazon? I don't think so. I really don't. And it's the same for a lot of the Mag 7, except Apple, in my opinion. But, like, for a lot of the Mag 7, I think 3 to 4 years from now, even 2 years from now, I don't think these prices are going to be scary prices to buy at. Like, is Meta or Google not going to be as dominant as they are 2 years from now? No, these companies don't have competition. Like, they just don't. Their competition is each other. Whereas all these other SaaS companies like Adobe does have competition, right? So like, do you like who's buying Adobe in this market? What, like, it's just so interesting, right? Like, who's actually saying, well, the thesis for the next couple of years is Adobe. There's no dividend. There's tons of competition from Figma and Canva. There's not really an AI moat that's reasonable because Google's going to come out with their own video image editor. They've already have to an extent. Like, so I'd rather buy Google. I'd rather buy companies that have defensible moats in times of volatility. And if you're not buying something like the Mag 7, then you have to have a hell of a thesis, like a company like Palantir or a Robinhood, right? You have to have a real hardcore thesis that is not going to be shaken up by anything in the macro. Or if it is shaken up in the macro, it becomes a great buying opportunity if you're not buying Mag 7 at some of these discounted prices. If you also believe in the growth story of Mag 7. Like, to me, everything now is compared to the Mag 7, given how cheap they've gotten. And if it doesn't pass the test of, like, is this company uniquely set up for growth and is highly differentiated, then I'd just rather buy NVIDIA or Google. And I don't think that's the worst sort of like gut check against getting interested for a lot of these stocks. Like Steve's super bullish on Block. I really don't like Block at all. But like Steve thinks the numbers are so ridiculously undervalued that it's a better buy than even some of the Mag 7 names. I disagree qualitatively, even if he's right on the numbers. I just don't really like the company in general. But like, you've got to do some real digging on the numbers to feel that Block is a better buy than Google right now. Because Google is Google, Block is Block. So Block has to be severely undervalued if you're not buying Google at 15 times earnings and saying Block is a better buy. And I don't think that's a horrible test to put a lot of these companies at as well. Bitcoin right here, 84,000 down from 84.7. Verizon was slightly green on the day. The NASDAQ, Dow Jones, Dow was up 300 points. NASDAQ was up about 100 points. And then the S&P was up about 36 points here on the day. Block's biggest argument is that it hasn't done anything for a while and is due. Yeah, I agree. The chart has consolidated. I think that's fair. And you can make an argument. I mean, that's another Steve argument, which is that Bitcoin took off to the moon, but Block didn't really do much. Here's an update on Google and some of the stuff they talked about this morning when it came to AI.
Google's AI image generation tools are getting a ton of buzz on social media over the weekend after expanding access to the product to more users. Test it out for free. Deirdre Bosa has more in Tech Check. Deirdre, welcome.
Hey, Kelly. So buzz and adoption, those are two elements that Google has really been chasing since the AI race kicked off in full. And that is what happened with that wider release over the weekend, despite its mouthful of a name, Gemini 2.0 Flash Thinking Experimental Model. Now, its upgraded image generation tool, it got a lot of the attention, leading to some of these viral moments. This user who added a very realistic looking girlfriend to his solo dinner, and then I think he sent it to his mom. Another who said she was running late to work. She asked Gemini to turn her selfie at home, that's on the left, into a selfie on the subway with a thumbs up on her route to work. Another example that many people were using was successfully removing watermarks. Had to try it out for myself, of course. So here's a photo, this is what I did, holding a puppy at our One Market set before and after. Now, image generation, it's not new, of course, in the AI world, but what the tech community valued here were key incremental upgrades that made the results more realistic and controllable. In this image, for example, there's context awareness. It didn't just plop a puppy beside me, but I'm holding it. There's also lighting consistency, easy for the average user. I did not need to tweak anything. The downside, though, is that these features are still really hard to find for the average person, hitting on the major complaint that has dogged Google Google for the last few years. For all of its breakthroughs, its AI is often, it feels buried under layers of menus or experimental labs or separate apps rather than just seamlessly integrated into products that people are already using. And there's many of them, of course, Kelly. So a development and a breakthrough if Google can really take advantage of it this time and not let it sort of fade below the experimental layers.
I didn't know that's what they rolled out today. That video was, I watched it for the first time like you guys did. I did not know they launched image generation like this. Like what I said about Adobe was not because I watched this video. I just in general, I felt like Google was going to do stuff with images, but yeah, apparently they are. That's crazy, bro. This is crazy. This guy made it seem like it had a girlfriend, or he had a girlfriend. That's a realistic picture, bro. That's kind of wild, dude. That is crazy. But see, this is my point. Like, why would you like Adobe when Google can do something like this? Like, it's just like, and again, the reason Google can do this, they have the cash flows, they have the money to spend on the GPUs, they have the R&D infrastructure, they have the R&D talent. Like, Adobe doesn't have any of that stuff. They have it to an extent, but not at the level that Google has. And that doesn't mean Google has to take Adobe's lunch. What that means is just Google is severely undervalued for what they can offer to the market at these levels versus individual stocks that only do a section of what Google is doing when it comes to this image AI stuff. Speaking of Google, here's a headline we just got right now. 20 minutes ago, this came out. You guys are funny. Admit this functionality was made specifically for you. You guys are very funny. Google's back in talks to buy Wiz for $30 billion. Huh. This is a cloud security startup. They were going to buy them for $23 billion in the summer. And then the startup said no, not Google. The startup said no. And now they're back for a $30 billion deal, as per the Wall Street Journal, if they can make it happen. That is really interesting, bro. That like Wiz, I listened to the founder talk about why they denied the acquisition, and basically they said they think they can become a $100 billion company over the next 5 years. It's so interesting because they denied the offer back in July 2024, I think. August, July, around that time. Markets have obviously turned since then. I mean, we're up since then, but we are still a lot lower than probably what even they thought we would get to, coming back to the 200-day on the S&P. Maybe the founders of that startup are like, hey, we're not going to be able to get to 100 billion in this environment over the next 5 years. Because if you read the email by the founder to his employees, that was the message, which is, hey, we rejected the offer because we're going to go to 100. And I mean, they're getting more than 23. They're getting 30. So that's nice. But that does seem like they're capitulating a little bit because they don't think they can get there. Which is what happens when shit hits the fan, you know? Also, Trump just said JFK files are coming out tomorrow. So we are officially getting JFK files tomorrow, it seems like. I hope those are not as redacted as the Epstein files. Hopefully we actually get some real files, but that will be something. And then we have to get the MLK files as well, because those are going to be pretty important. I don't think Trump was live today. I think he was he? He was at the DOJ a couple days ago and he gave a speech there. But I don't think he's live currently right now. S&P 500 probably regretty after skipping Hood. Dude, that was such a stupid thing for them to skip Hood. I mean, again, they could have skipped it, but they picked Williams-Sonoma over Hood, which I still don't get. Williams-Sonoma is $1.5 billion away from being under the threshold necessary to be included in the S&P 500. How do they pick a company that's that close to the margin of error or margin of safety in regards to being eligible over something like Robinhood or Coinbase for that matter? Like, it's just insane. Like, who did Williams-Sonoma pay to get into the S&P 500? Because like at this point, I just can't believe they picked Chinese coffee machines that are charged with a 30% markup over tech companies like Robinhood and Coinbase or Trade Desk. Like, I can't get it. I can't get it. It doesn't even feel like it's diversifying. It just feels like it's like, I don't know. It just feels like they didn't want the other companies to get it. Maybe they didn't want Hood and Coinbase to get in because of the crypto volatility. Maybe that could be a reason. But I just feel like that would be a bad reason. They're not like MicroStrategy is way more, volatile when it comes to that stuff, but not necessarily Hood. Okay, let's get another update from how to think about the current pullback, and then we will keep going from there.
It happened. Give me your assessment of the correction and I guess what you see as a potential impact here in terms of the portfolio effect.
Yeah, thank you for having me. I think that's the number one question we're fielding from clients right now, and it's an obvious one is, we've had a 10% correction. This is a much more, it's not like an atypical event, but it's much less common than like these 5% pullbacks we've been suffering through over the last couple of years. And so the big question is this the bottom? Should we be de-risking down here or should we be buying the dip? And to us, like when you zoom out and you look at history, there's been 52 of these things, and if of these corrections, and the major determining factor on whether we go lower from here, significantly lower, is whether the economy is going to hit a recession in the next 6 or 12 months. So that's where we focus a lot. In our basic indicators, just to be clear, we don't see a recession. The deficit is still pretty large. We've seen private credit ticking up. The credit spreads have been really well behaved during this 10% decline, which is basically what you see if we're not hitting a recession during a correction. And so for the most part, and we don't see early cycle, job losses, what we expect. So for the most part, all those things are in place. But the thing you alluded to that worries us, what we always wonder what could be different this cycle, it's this, we've had wealth effects, such a positive impact on the economy. The upper strata of consumers have carried this economy. That's on the back of asset price inflation. And now this 10% pullback, when you think about it, and with households so overweight, equities has resulted in a 12% of equivalent of 12% of GDP wealth shock to household net worth. So the 10% corrections are pretty common, but these wealth shocks are pretty rare. It's only the 13th one of this magnitude we've seen. In half of these cases, the economy does end up in recession. So if you're looking for something to be worried about, this is where we're really digging in right now.
It's interesting because if you just look at the aggregate value of equities, and therefore, somebody owns all the stock, so that's that's where the wealth effect is coming from. We're back to like last summer's levels, right? In absolute terms, you think that kind of round trip back to where we were 6 or 8 months ago is enough, either psychologically or even by the consumer balance sheet, to change spending behavior a lot?
I think so. The short answer is not enough to put us in a recession. That we're not there yet. The other factor when you think of these wealth shocks, just to be totally transparent on the data, is because stocks have become a larger, increasingly larger share of household net worth over these years. These things have become a little more common. My stats going all the way back to 1950, but we saw one of these in 2022 without a recession. We saw one of these in 2018 without a recession. And so it's important to flag that. I think the duration of how long we stay down here and how quickly we recover from these lows in the volatility, that's going to be really determine how much retrenching we get from the consumer. But we're at a different place in the cycle, and I do think that some of the lower strata is already in a bit of a recession. And so if you get this high income consumer pulling back, it could be really bad for the economy. So yeah,
his core argument there is the consumer needs to not pull back as aggressively as we have been seeing some of these consumers pull back, especially the high income consumers. And number two, people have made a lot of money off stocks over the past couple of years. And if people want to get a little bit more risk off, that could create this wealth shock where people take their profits off the table, decide to just hold on to their wealth versus continue to reinvest it. And that could lead to some more volatility. So I think we're going to have to make sure, and we'll see in earnings, Delta already said consumers getting weak. That's something we can't ignore. Same thing that Walmart said. I think it's going to take a few more earnings for us to really solidify this consumer weakening narrative, which is okay because it means inflation comes down, but it can't be like the consumer's collapsing, because then inflation collapses, but for the wrong reason. We got Trump, who's not live, but he was just live 10 minutes ago. Here's what he said about the JFK files and a bunch of other stuff.
Giving all back our country. But while we're here, I thought it would be appropriate. We are tomorrow announcing and giving all of the Kennedy files. So people have been waiting for decades for this. And I've instructed my people that are responsible, lots of different people, put together by Tulsi Gabbard. And that's going to be released tomorrow. We have a tremendous amount of paper. You've got a lot of reading. I don't believe we're going to redact anything. I said, just don't redact. You can't redact. But we're going to be releasing the JFK files, and that would be tomorrow. Do you have anything else to add to that, Carolyn? So that's a big announcement. They've been waiting for that for decades. Then I said during the campaign I'd do it, and I'm a man of my word. So tomorrow you have the JFK files. What time will they be released? Tomorrow afternoon. Okay.
Have you seen what's in the files? Have you read them?
I've heard about them.
Was there anything interesting?
It's going to be very interesting.
Was there an executive summary supplied to you, President?
No, I'm not doing summaries. You'll write your own summaries. It's many pages. Is it 80,000 pages? Approximately 80,000 pages. So it's a lot of stuff. And you'll make your own determination.
You have criticized President Biden for using AutoPen in the last few days. Have you yourself ever used AutoPen, sir?
Yeah, only for very unimportant papers. And I don't call them unimportant. If you do letters where people write in and, they'd love to have a response, and we'll write responses, and I'll sign them whenever I can. But when I can't, I, would use an AutoPen. But to use them for what they've used them for.
So for those who don't know what he's talking about with AutoPen, basically Trump said last night that Biden's pardons for a majority of people in his family, Fauci, etc., shouldn't count because he used something called AutoPen. Now, I didn't even know this was a thing. I found out about it today. But apparently there's an AutoPen signature and a wet pen signature. And the only pardon that Biden signed with a wet pen was for Hunter Biden. Everything else was in AutoPen. And Trump's claim is that if you do it via an AutoPen, it's not actually real. So this is the picture of all the pardons from other people outside of Hunter. As you can see, the signature looks exactly the same. And the reason was because they use an AutoPen. Now, AutoPens are used in a variety of different cases. Like, let's say the president is abroad. He needs to sign something real quick. They use an AutoPen signature. But for pardons, Trump's claim is that there's no way you can pardon people with an AutoPen. So I don't know if they're going to take this to court. I don't know if he's going to use this as an argument to then prosecute the people that he wants to prosecute. I don't know if anything like that's going to happen. But that is the claim that he made last night.
Was terrible.
Yes, sir. And when you signed the CR,
Who are you with?
Sir, I'm with NBC News.
That's the same one. I don't want to talk to NBC anymore. I think you're so discredited.
Mr. President, when most people think of the Kennedy Center, they think of the Kennedy Center Honors. It takes place in December every year. Is that something that you anticipate hosting at the White House? And what do you think that
We're going to have honors. We're going to have, I think it's going to be a much bigger show than it has been in the past. It got tired, very boring, very radical left. Unless you were a radical left, it just seemed that nobody was chosen. There's a lot of people out there that can get the honors, and we're going to do it. I think we'll have a very big show. It's going to be a very big show. We have some surprises on that show, some big surprises, but I think it has a chance to be a very big show. That's a big part of the Kennedy Center, the honors that evening. And so I think you're going to be really surprised. I think it's going to get great ratings, actually.
President, there's been some discussion about potentially meeting with Putin in your administration. If there is a peace deal signed, would you be open to inviting Putin to the White House?
Well, I don't want to really even discuss it. I got to get the deal. I've got to get the deal signed. 2,000 people a week sometimes are killed, and we have to get that agreement signed. But that's the only thing I think about.
Are you confident that could happen tomorrow, as soon as tomorrow?
We're going to have a very important call. We've had calls, but we're getting down to a very critical stage. And we want to get the whole Russia-Ukraine thing done. And I think Ukraine wants it. I know they want it. Everybody wants it. It's tremendous death. The bloodshed is unbelievable, like few people have ever seen before.
And on the drug cartels, do you have a red line for the drug cartels that if crossed, it would automatically trigger a military response from the U.S.?
Well, we'll see, but we're not going to put up with it. This country is not going to allow people to come in and dump drugs and kill our youth and other than our youth, too. Older people are very much affected. So it's we're not going to let that happen. Thank you very much.
Mr. President, on the 30-day ceasefire, Mr.
All right, there you go. That was Trump for the day. I think maybe, you guys think someone told him to stop mentioning tariffs every time he talks? Because it's been 2 days, 48 hours with no tariff discussion. And ironically, we are green. So he's not tweeting about tariffs, not talking about tariffs. And so as a result, maybe that's what's helping markets stay as elevated as they currently are. Maybe even Trump got tired of seeing some of the red and he was like, all right, let me just not talk about tariffs for a while. D-Wave, great day for them. Quantum name up 10%, up another 1% after hours. NVIDIA and the GTC conference is going to highlight a lot more about some of the quantum stuff that's going on. Google down a little bit after hours, Tesla down a little bit, Palantir flat, and then Hoodie. Are we down after hours on Hood? We are 42.15, up a little bit, 0.32% after hours right now. He will unleash everything before Jay Powell speaks. Oh my gosh, dude. The Jay Powell speech is going to be an important one on Wednesday because, first of all, he talked at some economic club like a week ago, right? I was streaming it. I think it was at early March. And he said right before the non-farm payroll report came out that labor market's strong. We got the labor market report, 150,000 jobs, labor market was strong. So I don't think he's going to say anything that different. And he answered questions about tariffs. He said the sort of politically correct answer, which is that the current administration's approach to foreign trade policy is creating uncertainties, AKA we don't know what the hell this guy's doing. But it's not like he's going to say anything that different at FOMC. So I'm curious, like, where the market reacts to what he says. And are they looking for inflation talk? Are they looking for tariff? Like, what exactly do they need him to say to know if he's dovish or hawkish? And obviously, we're not going to get a cut, but I guess the market's looking for some words of encouragement for a May cut if it ends up happening. Wednesday, we will get an update on what the Fed thinks. Tomorrow, we will get Jensen speaking at the conference. He's waiting for GTC to be over and then boom, tariffs. Oh my gosh, dude. Like literally, it's been the only thing for the past 2 days that haven't been mentioned, which has been helping the broader market. Red Cat did not have earnings today, for those that are asking. I believe they have earnings in a couple of days, but I don't see their earnings anywhere, so I don't think they had earnings today. Yeah, it doesn't look like they had any earnings today. Did any companies have earnings today? No, nothing. Yeah, we had nothing today, or at least no main companies. We had DocuSign and Ulta on Friday, which were double beats. But outside of that, Forever 21 is going bankrupt again. So, yeah, if anyone shops at Forever 21, that's no longer a thing. Dude, I think I used to shop at Forever 21 like when I was like 14 or something. They had like a men's section, but like, yeah, I don't think that many people shop there anymore. Intuit's down after hours, is it? No, it's not down. I mean, it's down 0.01%, nothing too crazy. Meta's down a little bit after hours. Tesla still down another 1/3%, and then Google right here, basically flat after hours. Did you ever get a replacement gavel? I did not. I did not get a replacement for the gavel that TSA stole from me this time. Dude, on the plane coming back, so on the plane going to AIPCon, I had the whole row available to me. On the plane coming back, I still didn't pee, by the way, on the plane because there was someone next to me, but we had the middle seat that was open. So, granted, I probably just didn't have to pee, but it makes me feel like a very nice person to not interrupt that woman to get up. But we had the middle seat available, and there were multiple seats in the flight that were open. And I don't know, bro. This whole airline demand going down thing. Like I've been on a lot of flights over the past 12 months. The past 2 flights have been showing more open seats than not. And to me, that's just, I don't know. To me, I feel like maybe demand is slowing down a little bit. Also, I did see one stat that government purchases of airline tickets have gone down like 30% ever since Doge started like cutting a lot of these agencies like the CTFB. And so a lot of government related travel could also be coming down a bit. At least that's a headline that I saw, but not exactly sure about it. In general, it feels like my tickets were pretty cheap. They're the tickets that I bought. So that is consistent with what Delta said about airline fare, or what CPI showed us about airline fares going down about 4%. But I think in their next earnings, we're gonna have to really see how this plays out. Yeah, look at this from Bloomberg. United Airlines says it has seen a 50% drop in government-related travel. So however they define government-related travel, they said that 3 days ago. That could be another reason why some of these fares are coming down. Ray and I had the road to ourselves, and we were able to move and lay out because no one was there. Well, see, there's other people that are noticing. Dude, I have not had a row open on a flight in a while. When I go to San Francisco on the 25th, I mean, I hope I have a row open. I also hope I don't have a row open so that demand is not as bad as what it seems. But if demand is that bad, I hope I get put in a row that's open. Also, yeah, I mean, look, I have been more scared than not getting on flights just because you never know, right? And there's a lot of headlines of planes coming down. I think that could be contributing to some people not traveling. Is the fear of that a meaningful reason for why people aren't traveling? I don't think so. I just think if people need to travel, they're going to travel no matter what. But yeah, that could be playing a role for people being afraid. Summertime will be telling, correct. Dude, have you guys noticed it's already March 17th? Like, it kind of feels like 2025 is going by too quick. In 2 weeks, we're in April. 4 months of the year. 4 months into the year. Like that's kind of aggressive, bro. And then after April, you're in May. You're basically in spring when it comes to May. And then after May, you're in June. And then it's the summer. And it's like, it is kind of quick, bro. Like, I don't know if it's the downside momentum over the past 3 weeks in the markets that have made it feel quicker than normal. But it's been pretty freaking quick. The older you get, the faster time goes. That is also fair. But this is like January, February, March. Like I looked up and I'm like, oh, it's about to be April. Bro's just now finding out how time works. No, but you can't tell me it doesn't feel like it's going by super quick. Yes, well, yeah, spring starts this week, March 21st, right? But a bunch of schools already having spring break, right? A bunch of colleges are having spring break. Like, we're literally about to be into spring and then very soon into summer, which is just crazy to me. It's daylight saving time's fault, dude. I really forgot we had daylight savings times the other day. Like, all the Europeans in the chat were like, why are we starting an hour later? And I was like, what are you guys talking about? Like, this isn't the normal time. And then I realized, oh, it's because of daylight savings. So it's so weird, bro. But we do that in the United States. Amit, do you regret buying your Tesla now with all the hate? Any concerns about where you park it? No. I mean, dude, the Tesla, it's the best car ever. I mean, like, if someone really wants to key my car or spray paint it, I'm just gonna have to live with that. And I don't know. I'm willing to take that risk parking it. Hopefully no one messes it up. But like, I would, dude, I don't know. Some of you guys have experienced it, but once you drive a Tesla, you can't go back, bro. You can't go back. It's like, I forget the Elon political angle. The car itself is just unbelievable. It's the best car ever. The one thing that I am getting annoyed about around FSD though, because I just upgraded to the latest one, dude, it is so, what's the word? Authoritarian at looking away from the road. Like, I'll look to the side for 2 seconds. It'll be like, please pay attention. And I'm like, bro, like, I'm looking out the window. Like, are you serious? You try to change the music on your phone. It's like, please pay attention. And I'm just like, okay. Like now you're just getting aggressive. Now it's just being too much. Granted, I get why they're doing it, right? They want to make sure you're like paying attention, but it's a bit too much. At least currently right now. The 13.28 update kind of exacerbated that as well. Yesterday. How many cars have you owned? I've owned 2 cars, Honda Civic and a Tesla Model Y. So again, my car opinions you should take with a grain of salt because I've not owned a ton of cars in my life. But I just love the Tesla, dude. I really love it. And with FSD, it's like I'm in my own Uber. It's just that I'm in the driver's seat, but I'm not driving. And with the lack of interventions I have to do, it really is an enjoyable process. So yeah, especially with my ADHD, dude, it's hard for me to stay focused. So, dude, I there have been many times where I've caught myself drifting while I'm driving, thinking about something that's happening, and then I have to snap back into reality, and I'm like, wait a second, I'm driving right now. And it's like, you guys have had that moment, right? Where you're like driving, and then you start thinking about something, and you're so deep into your thought, but you're like going through all the motions, and because you're I've been driving for like, I don't know, at this point, 5-6 years, like you're able to make the turns and all that stuff. But like your brain is on autopilot, which is not healthy because it's not actually the car driving you. And if you start going too deep into your thoughts, you never know what could happen. I've done that many times, bro. Many, many, many times. And now with FSD, I could just like sit back and think and let the thing drive me. So yeah, using muscle memory, that's the word I was looking for, and getting back home. Many times, bro, when I used to drive 120 miles up and down New Jersey a couple years ago, it would just be muscle memory every time. Like but like the fact that I had to put my foot on the pedal and actually like make the turns on the exits, like I'm like it's like someone thinking of a flip phone in today's day and age. It's like, why would you flip open a phone and then press these numbers? It's like, you should just be able to say, hey, call mom, and then it calls your mom, right? Not have to go into your contact book and all. And I'm thinking, I feel like the whole driving stuff in 10 years from now, I know Steve thinks everyone wants to drive. I think he's going to be wrong on this. I think in 10 years, people are going to look back on people physically driving and be like, what? People physically drove? People have to actually press the pedal? Like, why? The computer's smart enough to do it for you. You don't need to do it. And I know some people love driving. I get it. But like, I still feel like it's to not have to worry about it. I wish I could say, hey, Tesla, the way we say, hey, Google. Yeah, they need to incorporate Grok. They need to incorporate Grok into this thing. That'll make it a lot better. Dude, I would love to do a live show using FSD, but I can't. Because if you are not at all involved in like looking at the road, the thing will just get mad at you and it's going to put you on penalty. So I don't think there's ever a world until we get unsupervised FSD where I can legitimately like talk to a camera live. Because it is so like anal about random things that you do in the car, especially if you look out the window. Like twice today, I looked out the window and it gave me a warning. And I'm like, you got to be kidding me, bro. Looking out a window is like, that can't be triggering the aggression thing. But that's what it does. Wear sunglasses. Okay, so someone told me about this. I have yet to use this trick yet. But I'm getting ready to use this trick because I'm just getting annoyed at it. Like if I need to check my phone for 2 seconds, like I shouldn't be put on penalty, especially when it's on a highway and it's just driving normally. So I think I'm gonna need to buy myself a pair of sunglasses because I don't have sunglasses. I did have sunglasses, but last time I wore them was on New Year's Eve 2 years ago. Remember? Do you guys remember? Were some of you here in 2023 when I wore the sunglasses for the whole stream? It was so dumb, bro. I just felt like wearing the sunglasses that day, and everyone was like, "Why is this guy wearing sunglasses?" But then I don't know where those sunglasses are. Since that day, I haven't really wore sunglasses. How do I find that stream? Damn, I forgot what I titled it, but it was New Year's 2023. You've gone years without sunglasses? Yes. What's put on the penalty? Dude, you get banned. I already got banned for a week. I don't know if I told you guys, but a month ago I got banned for a week. And yeah, it was, but thankfully that was the week I was traveling, so it didn't matter. But I got banned for a week from FSD because I was using my phone too much. And they really banned me, bro. There was a notification popped up, and it was like, you have disqualified your use to engage in full self-driving for the next 7 days. And I was like, I was like, really, bro? Granted, I was on the full trial, so I wasn't paying for it. But now I'm paying for it. And if they ban me for something I paid for, I feel like that would just be so annoying. But that's also their rules, right? So it is what it is. Do the bans get longer and longer? Yeah, I think so. I think maybe they'll let me ban. I think maybe they'll ban me for another week, and then after that, it's like a month or whatever. No, that time I got banned for looking at my phone. I can't even lie. I wasn't looking out the window. I was checking my phone way too much, bro. I was like, like it would tell me to stop, and I would just like this would be me, right? I'm looking at my phone, beep 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 beep, and then I'd put the phone like here so that it goes away. And I bring back my phone, and I'd be like beep beep. I'm just like, shut up, I don't care. And then finally one day they were like, "Sir, you have violated the terms and services." And I'm like, all right, I probably deserve that. I'm not gonna lie. But I think I'm gonna get the sunglasses to try to deal with it. Can you jailbreak your Tesla? That's interesting. I don't think anyone has ever done that. I don't think you can. That would be wild though, because if you could command the car to do a lot of crazy shit by jailbreaking it, but I don't think anyone has ever done that. I don't think Tesla would allow them to, but that would be crazy if you can. Elon did talk about some of the autonomy vision today on the new podcast. We got like 2 minutes of him talking Tesla instead of politics, but here's what he had to say about autonomy.
You'll be able to have a lot of the robot parts are cosmetic. You'll be able to switch out the kind of snap-on cosmetic parts of the robot, make it look like something else if you'd like. So there'll be ultimately billions of humanoid robots. All cars will be self-driving.
In 10 years?
In 10 years, probably 90% of miles driven will be autonomous.
Huh.
Wow.
That fast?
Yeah. In 5 years, probably 50% of all miles driven will be autonomous.
Now, if AI will be smarter than any person, how many jobs go away because of that? And what do people do if you've got billions of people that are losing their jobs? Like that, a lot of people are understandably freaked out about that.
Well, goods and services will become as close to free. So it's not as though people will be wanting in terms of goods and services.
So why is that? Why are goods and services free in an AI world or close to free?
Well, you have, I don't know, call it tens of billions of robots that they will make you anything or provide any service you want for basically next to nothing.
It brings up the question, right? If we do have robots that meaningfully take down the cost of labor, the cost of goods, cost of services, et cetera, and then you have self-driving, so cost of transportation, whether it's Waymo, Tesla, whoever it is, like self-driving is going to be a thing. Lots of input costs, things that we like paying $40 for me to go to the airport shouldn't be a thing in the next 10 years. It should be like $15, right? And if we can actually have that much of a reduction in prices across the entire economy, it's going to be very bullish for company margins, very bullish for productivity. The one thing it's bearish about is jobs, because the reason I pay $40 to go to the airport is because there's a Uber driver who makes the majority of that $40. Therefore, my $40 is supplementing some of his income. If that Uber driver is no longer needed, just like that factory worker is no longer needed, given what Elon's talking about when it comes to robots, yeah, there's a lot of jobs that are going to be gone. And this part of the AI thesis, I've never really come to a good conclusion on. Me, Tanner, and Roy had a good debate about this a couple of weeks ago on Robinhood Weekly. I know it's Robinhood Weekly, but we ended up getting into this discussion. And Tanner thinks there will be plenty of jobs to supplement the jobs that go away because of AI. I'm not sold on that thesis yet. I think there will be new jobs out there. Yes, you're going to need people to control the robots, make the robots, yada, yada. I get it. But There's going to be more creative jobs that are out there because creativity is probably going to have a higher premium. But I think the far majority of jobs that are just manual labor that can be automated with a self-driving car or with a robot, it's a scary situation of what happens to those jobs or what happens to the people that are in those current jobs. And it brings up a reasonable argument about, hey, do we have a robot tax? Do we tax Tesla and Google and all these companies that are building robots a small percentage to be able to maybe fund a universal basic income? Like, I'm not sold on what the solution is, but I don't think anyone really knows how this is going to play out. But it does seem like a lot of those jobs are not going to be here for a long time. Yeah, telephone operators used to be a thing. We don't know when new industries are created. That's fair. But now these call centers are being automated with AI. You just got to ask yourself a question like, where is the replacement? Because the problem with a lot of the arguments around AI will create new jobs is that the reason it's replacing jobs and why that's technically good is because it's increasing productivity and margins. You can't increase productivity and margins if the jobs are replaced by another human, because the whole point is for the jobs to be replaced by something that doesn't cost anything, aka AI, or cost significantly lower than a human, like a robot. So if the jobs are replaced by something, they can't be replaced in the same industry because then the costs are going to wash out. So they have to be replaced in a different industry, which means we have to form a different industry. And, you know, what are going to be those different industries that we end up forming long term? Less jobs wouldn't necessarily be a bad thing if income per household goes up or costs go down. I agree. I mean, look, that's a fair point. If costs go down so dramatically, based on what Elon's talking about, technically, less jobs in society is not the worst thing in the world. But there's a broader question about purpose and meaning. Like, what are people going to do if they don't have any purpose to do what they want to do? Because I don't think people can just sit home and watch Netflix all day. Like, that's not going to be fulfilling enough for most people that need to do something. Amit, did you watch Her yet? I did not. However, I'm on season 2 of West Wing. Amazing show. Again, I keep telling you guys. I genuinely believe this, dude. My recommendations on pop culture hold a significant amount of weight in society. I can't even get through this, but because I don't get bullish on any show. And so if I'm bullish on The West Wing or on High School Musical, again, my opinion is very rare when it comes to, like, what's the analogy? Like, I'm trying to think of an analogy of someone that only says something once in a while. Like, when I make an opinion on pop culture, you should take it freaking seriously, dude, because I don't give many opinions because I don't watch anything. So I don't have that many opinions. Dawson's Creek also. For those of you who have actually taken me up on, I've been talking about this thing for 3 years about Dawson's Creek. The people that have watched it understand how great it was. The people that didn't, you've yet to engage with the beauty of Dawson's Creek. It was a great show. Phenomenal show. Thank you, Tony, for agreeing with me. West Wing is the GOAT. Thank you. I appreciate it. Did you say High School Musical? Yes, High School Musical is it's a good movie, bro. People, it's underrated. It's completely underrated. Talk about Carp's hair, not pop culture. Well, Carp's hair was very carpy when I met him at AIPCon. Dude, it's so crazy. Some people are like, I wish you had your hat off during that picture. I wish I had my hat off too, because that would have been actually a fun picture if my hat was off and my hair was as crazy as Carp's. But I got bullied last week when I showed you guys my hair. So I want to get a personal stylist. I want to pay someone to like give me a brand new style, like clothing wise, hair wise. Like I want to, because I don't know how to dress. I don't know how to style myself. I wear flip flops every day. Like literally, this is like, I don't dress, bro. I've always been a horrible dresser. I've never cared about like what I wear. My mom has made fun of me for years because my mom cares so much about like style and fashion, but I suck at dressing. And And so I legit want to hire someone, bro. Like I want to hire someone and I want them to like assess what my style would look like. Do I need a buzz cut? Do I need a perm? Like, cause I can't figure it out. I don't trust myself anymore. Sometimes you just gotta realize you just don't know how to do certain things. And so I don't know, maybe when I move out. Oh, by the way, I went to go see apartments, dude. I freaking hate apartment hunting. I hate it so much. Like, I cannot tell you how much I hate the process of trying to find a freaking apartment. I made some progress yesterday, but still, I'm sure anyone will relate, right? Who's been like ever searching for an apartment or a house or moving out. It is so annoying, bro. Like I visited like 10 places yesterday, literally yesterday. And you know what really pissed me off, dude? I parked my car in this big ass garage, the garages you have to pay for because there was no street parking. And freaking, I get back, I'm like tired, it's cold, and I can't find my car, bro. And I'm like honking the thing. I'm like trying to see where did I park this damn car because I didn't like make a mental note of it. And then at one point, I'm on the 5th floor of this big ass parking garage, and then I press the Tesla button where the car honks, and I hear the sound from the deck of the roof of the building I'm at. And I go to the deck and I click it again and I'm like, holy shit, it's in a totally different part of the building. There's like these 2 big ass garages and it's on that one across the street. So I was stuck in this thing for like 25 minutes trying to find my Tesla and it wasn't even the right place. That's what really annoyed me, bro. I was already so pissed off about not being able to find the right apartment. And then everywhere I went to, they're like, oh, well, you have to book it on this date or whatever to see an open house. And I was just like, and then the not finding the car killed me yesterday. But I think I made some progress, and I still think July feels very likely to move out. But it's just a question now of like officially feeling comfortable with the place I want to get. There's like 5 apartments now in the running, and all of them are priced pretty much the same, so there's nothing too different there. Now it's a question of if it works. Yeah, but wait, Tesla Summon wouldn't be able to wait, hold on. Can Tesla Summon literally take the car? Can the car automatically go down 3 floors and then meet me? Like, I think it was too complex of a location for the auto summon to like work. I don't think it would have worked like that. But the honking was enough for me to find it, and then I realized it was far away. Stay at home, save your money to buy a house. This is mentally, I've completely left the idea of staying at home. Dude, I've been home for 5 years. No, not how many? 5? No, 3 years. No, 5 years, right? 2020. Yeah, I graduated 2020. It's 5 years. Like, I'm ready to move out. It is time to move out. Also, again, like to me, it's more of an investment in a studio and a podcast and like really build. So the arguments to move out versus stay at home. First of all, I've stayed at home I've saved enough money for 5. You know, like people say, stay at home, save your money. Like I did that part over the past 5 years, and so it's not really about the money anymore. It's more about taking the next step career-wise, and to do that, you got to move out. There's just no reasonable argument to stay at home. Yeah, we'll save some money, but money can't be the only reason at this point. Unless Robinhood goes to $10, then I'll have a different tone, or Palantir goes to $20. But as long as those stay a little elevated, no, in general, dude, I mean, I've done the numbers. I should be able to afford it. It makes a ton of sense career-wise. It's logical. The house, I will liquidate my private investments in a couple years, parts of them, to buy a house. But there's no reason to buy a house right now in this market when I could pay the stupid rent and let my stocks appreciate. And then in the next couple of years, I can take some off the table with these private market investments that have already done really well. Hopefully those don't fail. I mean, those could go to zero, right? They're private startups. But if they don't, I think that's where I'll get money to buy a house. But I don't want to take money out of the market right now to put a down payment on a house, then take care of the house, pay taxes on the house, have a mortgage on the house, and then not even be in the house because every month I'm like traveling. Like, it doesn't make a lot of sense right now to buy a house. Dude, my parents want me to move out as well. My parents are not like anti moving out at all. My mom's been like, dude, the first apartment I saw in January, my mom like fell in love with it. She told me to buy it. Unfortunately, it got taken up like a week later. And because I'm not planning to move out until the summer, there was just no way I was going to get that apartment. But now my parents are not kicking me out because, you know, Indian parents never want you to necessarily leave. They're fine with you staying forever. But they're also not upset that I'm leaving. Like they know that, you know, it's time to leave. So for me, I am ready. I hate apartment hunting. Like I hate it as much as clothes shopping, bro. I hate shopping for clothes. This freaking black leather jacket I wore at AIPCon, I went to Macy's like a day before and I was like, I need an outfit. And I just looked and I was like, oh, a white shirt and a black jacket. Maybe that'll work. It's like I'm so bad at fashion, bro. I'm so bad at it. I need a personal stylist. I really do. Yo, if anyone does personal styling, like message me. If you I'm willing to pay. Like I really need a personal stylist who can assess my fashion because I have none of it at all. I can talk for days. I can talk for weeks. I can talk for months. I can talk for years, but I can't dress myself. I just don't know how to make. Oh, you can get tips from dude. Sasha has the best fashion ever. Sasha's amazing at it. She's great. Maybe she could help me, to be honest. I should ask her. But her outfits every AIPCon are amazing. Stop wearing Greek letters. Dude, I've had this hoodie for literally 7 years and I still I just don't care, bro. That's the crazy thing. I just don't care. I just wear whatever. With rates where they are right now, buying a home is kind of iffy. I agree. I don't feel any desire to buy a home right now with rates at these prices, dude. Not at all. This picture was really funny though that we got from AIPCon. This picture is hilarious, bro. It looks like I'm about a moonwalk, bro. Chad took this picture, and I said me looking at this bright green with some skepticism because I'm waiting for Trump to post about tariffs. This picture's hilarious, bro. Every time I'm skeptical about the market, people said I look zesty in this picture. I mean, I guess it looks zesty, whatever that means, but it definitely looks like I'm trying to moonwalk, and I'm super skeptical about whatever's going on right now. My mortgage is 1.28%. See, like, I'm not trying to pay freaking 7% for a mortgage right now. It's aggressive, bro. It's too aggressive. Looks like you're sucking in your cheek. Yeah, I don't know what I was doing. I was just looking out into the distance. I couldn't hear the people that were talking on stage. Like, you can't hear them. It's too noisy. So I heard enough of myself to talk to you guys in the camera, but I couldn't really hear the guests. So it was kind of just staying there and waiting until the next person comes up. It doesn't help the Grinder allegations. That is facts. Grinder was up today too, bro. Grinder bottomed at like 14. That's at $17. I still think there's a thesis there. I still think they have a monopoly on gay dating. I really do. Robinhood up a little bit after hours, up 1%. S&P's up a little bit after hours. Google still down. Tesla still down. Palantir's up a little bit. And that is pretty much it. On the daily recap today, I'm going to be trying to go through all the different, not all the different Palantir partnerships, but the major ones. There were 17 partners they announced. That's the official number. So I will be talking about some of those today on the recap. And then we'll be talking a lot more about it on Palantir Weekly. We couldn't do Palantir Weekly for the past 2 weeks because I was traveling, but this Friday we will talk more about Palantir Weekly. Okay, cool. I think that's it. I think that is it for today. Tomorrow we've got Jensen. Wednesday we've got JPow. And yeah, and Saturday, yeah. So Jason will be tomorrow. Oh yeah, Jason will be tomorrow as well. So most likely options 201 tomorrow or on Saturday. I'm free all of Saturday, so as long as Jason's free, we should be good to go. And this will be a good one. And we'll be able to go even deeper into options. All right, cool. Thank you, everybody. Appreciate it. More AIPCon interviews coming out probably in a couple of days. I'll have all those edited and out soon. Daily recap out in a couple hours, and we'll keep going from there. Oh, and then Hood Weekly at 9:30 tonight. So we'll have Hood Weekly as well. All right. Thank you, everybody. Have a good one. See you guys tomorrow on the Market Open and tonight on Hood Weekly. Bye, everybody.